What's up, guys? Welcome back to another episode. It's Rustic, and today we're going to be taking a look at Tesla's chart. And boy, we got a face ripper out of the gate today, but then we sold off into the end of the day, ultimately closing down and closing just below the 20 period simple moving average on the daily chart. Don't forget to check out the link in the description below, but we're going to jump right into the charts today. So here we're taking a look at Tesla. We got the daily chart open. We saw that gap open. We saw price rally up, right? Yesterday's video, we talked about the potential of Tesla going to, 180, even up to 185. And we got that today. We got above 180. We didn't quite get to 185, but that still doesn't mean that we won't hit it by the end of the week. We'll just have to wait and see what happens. We were talking about that daily fair value gap. You can see we pushed almost up to it and we failed to deliver into that fair value gap. I think we're cycling back down, and I think we're going to see a push back up into that fair value gap. And I'm looking at this 62% extension, 189.39, or potentially consequent encroachment. Some of you guys may ask what consequent encroachment is, and that's 50% of any of the blocks that we talk about. So if we're talking about a fair value gap, the 50% of that fair value gap is consequent encroachment of that fair value gap. If it's an order block, if it's a breaker block, consequent encroachment is always the 50% level of that block. So I am looking for price to push up to that 62% extension and potentially consequent encroachment of that daily fair value gap. Now, if we push up there, Tesla's notorious for going to 62% extensions without going the full symmetrical swing or even the 2 standard deviations. And so I would expect that if we pop up to that 62%, give or take maybe all the way up to like 190, that we would see some correction back down. And where would that be if we did? Let's take a look at that. So again, if we're just looking at the daily chart, we kind of got this nice structure forming. We pushed up, right? Do we get a further push up tomorrow up to that level I'm talking about? At that point, we'd be above the 20 period moving average. Then I could see us coming back down to test that 20 period moving average before making a decision. Do we want to go deeper into sell side liquidity down where this order block rests, or do we want to push up even further to hit that symmetrical swing, maybe dig deeper into this fair value gap, right, before we then see any major sell-off at that point? Now, if we did get all the way up into this fair value gap, I might expect that we would take a high back up at 205, 206, right, and then we might see again a dump back down. If that did happen, right, and this is kind of speculative because we're not here or there, but we do have a deeper, right, potential for a inverted head and shoulders. If we were to get back up to that buy side liquidity, that's internal buy side liquidity, and we saw price dump back down, setting up a shoulder, then we could see price rally back up, and that would be our target to the 250s. But we won't even get on that note until we get closer, or that looks like maybe something that's going to play out. Because we know Tesla can flip on a dime. Tesla could go ripping out of nowhere. Tesla can go dumping back down to take that sell side. We'll just have to wait. We're not going to predict so much. It's fun to maybe anticipate where price might go, but we are reactive. We are oftentimes day traders, scalpers, especially if you follow the Discord. Links in the description below. Raw stocks, premium membership, currently 50% off. But if we go ripping up, that'd be totally sweet. I know we've all been waiting for that return to 250. But you can see in this image here on the daily chart, we got our major support and resistance levels, right? 160 is now our major support. It is a previous order block. We found support in it now, right? And then we got that buy side order block up at 252.90, and even a little higher if you go deeper into that order block. So anything in between, and there wasn't much structure, is buy side liquidity on the way back up. Because there wasn't much structure, there's not much to hit. Again, we're looking at 205. And then we have like really minor internal liquidities at like 241 and then maybe like 218. Other than that, there's a gap that almost filled but didn't quite. We might come back, cycle back around to fill that gap eventually. So we'll just be waiting to see. There's something on there's stuff on the horizon as far as like into April. We got earnings coming up. We also have the catalyst of the full self-drive. And so, a lot of positive things, potentially happening for Tesla on the horizon. I could easily see us just kind of grinding up to earnings, and then potentially, earnings being a catalyst to dump us back down. So interested to see how this all ends up playing out. If we jump into the 1 hour chart, and we take a look at what the 1 hour chart is saying, the 1 hour chart ended right on the 20 period moving average for the 1 hour, right? Trickled down. We took that fair value gap. We closed it out. There's a bit of consolidation here. We found support on that 20 period, right? We are coming off of an oversold kind of back into the middle. Now, something I'm watching for, and this is going to really depend. This is going to depend on you guys being reactive to what price is telling us, right? As the trade is happening. But something I am watching for is for this swing high to low. And then if we see price pop back up to this optimal trade entry level, okay, we could definitely look to go short if it doesn't shred, right? If we out of the gate tomorrow take a new high and it doesn't look like we're stopping at that 184.14 or whatever, right there at that new high, if it's not just a liquidity grab and we punch through it, right? Then what we could expect is at that optimal trade entry, if we see a short time frame inverted fair value gap or bearish fair value gap occur right at that level of 182.17, give or take, right? Could push a little bit higher, a little bit lower, maybe at the 62%. But if we pop up there and we start to see a sign of a turn, what we could look to do is short that optimal trade entry and look for a push back down to fill this gap from open today, right? And that would be a 62% extension to the downside, right? And then we could look for price to find support there. There is a big breaker block here. There's some consolidation. There's lots of different kind of stuff going on in that area. It's also pushing back down on some on the fib levels from the move up. And so, that's definitely a possible trade to take the short and see if we can write it back down if that looks like it's going to happen. Now, again, if we get up to this optimal trade entry and we're breaking out and we're heading to a new high, do not take that trade. You want to see a smart money concepts, some kind of smart money concepts indication. Like I said, on the 1 minute chart, 5 minute chart, that might be an inverted fair value gap. That might be, a topping process and then seeing a bearish fair value gap form, something like that. If we don't get that indication, don't take the short. We pop back down into some lower time frames. On the lower time frames, you really get to see that rip up today, right? This is our pre-market, 4 a.m. We get, our London trading range going. We pop up, we consolidate, and then New York opens, and we go running, right? If you're following in the premium section of the Discord, again, links in the description below. 50% off the first month's membership using code RAWSTOCKS. We took a swing trade yesterday, and we closed that trade for over 150%. I think we closed it too early when I show you on the 1 minute time frame. We definitely left some money on the table on that trade. Probably could have gone closer to 300%, but it was a nice $1,500 trade. And so if you're following along, good job on that. I know many traders took it and many traders profited off of that. Now you can see on the 15-minute chart, we delivered right into that 15-minute order block, right? We wicked through it, we rejected, and then we started to sell off from there. On the 15-minute chart, we did not have any clear indication that price was going to continue to head down. I mean, we did have an RSI that was overbought. I guess if you're looking at just like wicks, which are definitely, you can look for wicks to give you some answers. And you can see we start having lower lows on each one of these candles. We pop back up, right? This high does not break this candle high over here. And then we continue to sell down after that. So if you were looking for just using 15-minute candles, you can say that when this wick low closed, when this candle closed below this wick low, then there was potentially an opportunity to go short. Ended up being a nice trade if you took a short. But if we jump down into the 1 minute, you can see a lot more clearly how there was indication that you could enter a short position. So let's get this all blown up, right? As we're watching price rally up, right, on that 15-minute chart, because if you're a day trader or a scalper, you're watching the 15-minute and the 1 hour for your high time frames. So as you see it push up into that 15-minute order block, right, we see a fair value gap get laid here, right? We're above the 20 period moving average. So let's look and see for confluence between our retail indicators and then our smart money concepts. So if we have a bullish fair value gap, and again, a bullish fair value gap is a gap between three candles. Basically, you take candle number 1, candle number 3, and you look for the area between the wicks, that's going to be a fair value gap. So we start off by having a bullish fair value gap. We know we're approaching a top, right? 1 minute's overbought, 15 minutes overbought, right? All of our time frames are overbought, or our shorter time frames are overbought, right? So we see this, we see that final run to take that high. We catch that candle that starts to break down, okay? And then we pull into that bullish fair value gap. Now we see that invert, right? And so as it inverts, it also has crossed the 20 period. So there's confluence between the retail indicators and the smart money concepts. So if we change that to orange, that's our inverted fair value gap. That's when any fair value gap gets traded back through. So bullish fair value gap becomes inverted. Now it's a bearish look, and we're looking for price to push back up kind of towards that inverted fair value gap, where you get 2 different opportunities to take that short entry, okay? And so if we draw some arrows here, we can see we get that first push back up. If you missed it, we get that second push back up. Both of those are opportunities to go short. If you're going to look for what the setup is and you're taking the short, we're going to look at setting our stop loss at the reinversion, or the, in this case, the upper boundary of the fair value gap, right? And then we're looking for a 2-to-1 as a low hanging fruit trade. Okay, that hits for sure. If you also look at Fibonacci levels, you can see we get right back up to premium or equilibrium, not quite. And then if you look at our extension here, right, we hit the symmetrical swing extension on the short-term move. So let's draw that out, and we can see, right, hit it almost to perfection. We ended up going deeper, didn't hit the 2 standard deviations. But the symmetrical swing would have been a very nice trade if you took it in that fair value gap inversion. So again, using your smart money concepts, or if you took it as a retail trader and you just looked for that 1 minute, crossover of the 20 period moving average, we would have got about the same entry, because this candle probably moved pretty aggressive, right? The fair value gap is the pop back up 2, or you take the breakdown of the 20 period. Either way, you're entering about the same position. But where the retail indicators can get you is that you see price pop back up over the 20 period. So say you entered here and you closed out here as we broke back over the 20 period. Well, smart money concepts would be saying, right, that our stop is not going to be back up until the inverted fair value gap. But if you were trading on the 20 period moving average, you might have taken that stop there and then maybe tried to re-enter here as it crossed back down. So the 20 period moving average on the 1 minute time frame can be fairly unreliable if you're using it strictly as your entry and exit points, because you can see how many times we cross over, and the 20 period is not going to give you any clear indication on where price is likely to head, right? But if we use liquidity levels, you can start to say, well, I'm going to target sell side liquidity, right? I'm going to target some of these liquidity targets, and then ultimately there is a bullish fair value gap that you can see we traded back down to. Let me make that back to the green color. And if you look right about where our symmetrical swing was, we saw a price hit that fair value gap and see a bounce. That would have been our full close on symmetrical swing. And then you can see fair value gap ends up getting inverted, but we traded all the way down into it and through it. So any of those targets would be great. Sell side liquidity, fair value gap. We know there's liquidity in fair value gaps. Or if you're using the fib levels, we're looking for that symmetrical swing. So hopefully this has been very informative for you guys. Gives you a good clear indication. These kind of inverted fair value gap setups happen all the time, not just on Tesla. We see them on SPY. We see them on QQQ. I did a short video explaining how the inverted fair value gap entry, which is an IC 2023 model, can be used for high probability trade entries. So again, hope you liked it. We'll see you guys next trading session, and take care.